Hi friends, let's take a look at Link versus the Bitcoins, Link versus the dollar coins, and as well, in this episode, Link versus the Ethereum Bobs. First off though, we'll start off taking a look at Link versus the Bitcoinals, because we've had this wedge drawn on the charts for the last wee while, and look at that in terms of its perfection, and in terms of it working for us, in terms of how you do technical analysis. Jolly good, jobs are good in. We've come up here and also then look at these pitchforks extending, these extensions to the pitchforks that we've got in, showing us like the nice little levels with the confluence here that we've had between the pink lines you can see of the parallel channels and the yellow serrated lines here of the median lines of the parallel channels, where the price action is being determined by in terms of wicks and support and everything else. How lovely is that? It's especially lovely when you look at today's price action, the way that it's sort of come right down here in terms of its lower end of its wick coming and touching off that area, and the upper end of the wick here touching off the top end of that parallel channel. It really just does lay it all out for you. If a picture says 1,000 words, and this episode is already about 10 minutes long, and I've only just started it, so I hope that you're looking at these pictures in the background to get a good idea of what we need to see happening. If we want to be bullish on this, I can also extend this down now to encapsulate the most recent price action. Then we want to see it going up above this median line of the upper of the parallel channel, above the one that we're in currently at 93k. That's what we want to see happen, 94k really, and then back into the pitchfork zone as well. But that's where we find the confluence of the yellow 21 exponential moving average, which has crossed over the 55 negatively towards the downside, and then this upper end of the fallen wedge. Now, of course, this is a so-called bullish pattern, and if we did get a move off the back of it, then we could be looking at a couple of targets, one of them being all the way up towards the 786 there at the top end of the upper line here of the pitchfork in the background at the 786 at 143,000 satoshis, actually going past the 618 over there as well. But should we see this more of a textbook type outcome from it, going about 60%, then what you see is the median line of the parallel channel, the Fibonacci golden pocket reversal zone in there. All of those things to be key targets for us. Hugely profitable in terms of trading if we were to go up towards that area. All of these areas down below offering up really easy to manage risk management strategies for us to be able to get through this. Okie dokie. But what we do have as well is the potential to go towards the downside. Whoops, undo button. And then we've got a couple of targets towards the downside as well. Okay, they're still there. There still is a real thing. Movements down past this, you've got the fake out territory in terms of this wedge here breaking towards the downside. It's going to have to be looking at a visit down towards the 200 simple moving average here in the 24-hour time frame. That would be fair. Also, the kind of where we have our previous lows would all be kind of fair. So we can just get a little sort of draw in a little sort of safety bucket here around. This is the sort of the fake out zone for this thing. But then if we do move past it, then here we have our measuring stick. Here's one I made earlier, and that takes us all the way down to the 1.272 Fibonacci retracement, looking down at 30k there. And if we look over to the left, you can see how significant that would be. Now, of course, we could just have a 60% style move off of that as well. So let me just grab a clone of my 60%er. That's a bit more than 60%, isn't it? Really, in reality. Anyway, you could be looking down towards where they have these resistance areas before, and I think the key area to really look out for is going to have to be this white line that I've got here on the charts. This is obviously the key area for us at 52k, where we see our previous highs before the big rise up the way. That would be taken out, of course, more than 100% of the move since the lowest swing before the movement up the way, but actually it'd be bringing us back down to where we could say our previous top was, and that would be an all right area to see things actually turn around from on a macro scale. Going over towards the dollar pricing, you can see it's more or less the same story over here with this wedge formation on the go, obviously drawn in with a degree of flexibility in terms of this. Just I always point out these things are subjective, and I never bother doing them sort of to the penny accuracy. And you can see that we've kind of turned around at this point here. Fake out territory again the same sort of dealio, bringing us down towards the 786, and where we saw this area here in terms of our highs previously before going up the way. And of course then the 200 simple being in this zone as well if we did go down the way. In terms of movements towards the top side and the full move and the 60% effort, we've already got 60% floating around there. Looking at a full move up the way You could be looking up towards where we have this, which is the 236 Fibonacci, undoing that and putting in the potential for more upward side movement and all that good stuff. But also, if we just get sort of 60%, then what we're doing is challenging our previous highs as part of this low downward trend. And maybe that would be quite good to see happen. But what we have here on the go is only the bullish divergence on the DMI and the MACD, which kind of indicate to us in terms of the pattern what we're looking at. In terms of stochastics and the RSI, we don't have that divergence there. This giving us a sort of extra warning sign that maybe while this is a bullish pattern, it might not operate all that bullishly. But of course it would if we break above the 144 at 917 and then go up towards the top line of this. You're talking about $10. Right now where we see the prices are is $8.68. So I know as well from reading the comments on YouTube, a lot of people have benefited from this chat here. Looking at where we see the prices are 23% up from where they were in yesterday's lows. Yesterday's lows actually coming down there and doing what we spoke about in terms of the golden pocket, coming in here and being supported by the 233 exponential moving average and the lower end of this sort of wedge formation thing on the go here. Whatever way you want to draw it in, it really doesn't matter if you're looking at it. Just, it's this zone here, giving people a perfect entry area, low risk management, and you could easily have got 20% there on that. But say you didn't want to be super risky about it, what you could have done here, and I'm not a financial advisor, none of this financial advice, is you could have taken something like 15% or 10%. And if you do that with leverage, then obviously you're talking about huge gains off the back of watching this channel. So all good. That's why I think it's fair enough to ask, can we get to 2K? Can we get to 2K in this month of September? Since we've been speaking about since we actually called the highs here, we spoke about this all the way along. I also probably got the lows during filming these episodes as well. Let's be honest about things. But we got the most recent of highs in advance. Told people about it. Episode where you saw an RC car about to crash. The title was avoiding the crash. Everything else, Then shorted it all the way down here to this point. Now, what I want to do on the channel is to be less sort of painting by numbers and giving people exact ways of trading, instead of directly putting money into your trading accounts and kind of bypassing your need to think about the charts yourself. I want to educate you on how to think about them. So I hope you're taking away lessons from this so that I can sort of back off a little bit in terms of how to do this technical analysis. Spoke to people the whole way down towards this target about how we could go down here the whole way down. I talked about it an awful lot. It was not a secret. I kept it as one of the most explicit and accurate trading that I know exists in the world, So, and I would love to hear about it if anybody's got any other ideas, but where there's anything better, there just isn't, as far as I'm concerned. And there we've seen the potential for people to get a nice 20% rise towards the top side, and there is still more left in the tank here if we want to do that. That's for sure. But I'm going to leave it up to you to decide how to manage your own risk in and around this situation, and looking at this here and deciding whether or not we've gone and done anything spectacular enough in terms of our turnaround as yet. For instance, is it good enough that we're at this swing failure point here in terms of this on the RSI right here is quite clear. This point and this point creating us up that easy zone. Is that good enough for us? Is it good enough that we're underneath this RSI moving average? Is it or not? And what would you feel like if we broke above it as well? How would that operate in terms of when you want to look at things and how you would take profit on things or not? That's all I'm going to leave with you to decide, because really, to be honest, if you've not made money trading on Chainlink having watched these episodes, then I don't know what to tell you. Honestly, don't. This should have made a lot of people a lot of money. Seriously good value stuff. So yeah, hit that subscribe button. And let's take a look at the Ethereum parent. Now, of course, what I was saying as well, I've already covered off these targets towards the top side. As you can see, look at yesterday's video if you want to look at any of them. They're all public records. They're all still available. And yeah, you can look up towards those targets. We've spoken about it enough. Same chat here, as you can see, drawn in such a way that it's, been perfect there. I mean, that no explanation required, right? A picture says 1,000 words. Well, there's a lot of pictures there. This Fibonacci retracement, on the other hand, should really be coming down to here. And you can see how that lines up so nicely as well with our highs, 869, right where we are now. Do we see that 236 get taken out? Can we see this moving towards the top side? Got to remember the fake out territory on this one as well. It's probably going to be around about that 382. really, honestly, I'm flabbergasted by how good I'm not flabbergasted because I'm doing it and I know in advance. It's just that putting myself into the position of the audience watching this, I would be sharing this with all my friends. Saying, my God, this guy. Tell you what, you got to watch him. Honestly. Right, here we are, Ethereum. So, we came all the way down to the 200 simple over here. And what we have over on the left as well is a 50% Fibonacci retracement point. Should we actually manage to find support into this area, then obviously that is going to be very, very good. But we can kind of look towards a couple of easy targets for us in terms of where we would like to see the prices get to become bullish on this again. And that, of course, starts off there at 0.028, where we got the 236 over there. Now, of course, moving back up from the 50% zone to the 38, the 0.382, as we've spoken about so many times on the channel, does represent a 236 Fibonacci retracement, so successfully taking out that will be sort of securing a 236 movement for us. This is drawn in wick to wick here from the highs down to these lows. This all lines up perfectly. So I don't really need this second Fibonacci on the go here. I could just not have it if I wanted to. I'll be talking about this in terms of movements from the 50% up to the 382. So there's a wee lesson for you. I hope you get a nice little takeaway in terms of value. This is crossed over. That's the green 55 exponential is crossed over this yellow 21 exponential moving averages here, and that is a negative thing. And of course, this is coming right in at this 382, which is where our 236 really is residing as well. So should we see this operate as resistance, that would be not much of a surprise, would it, or would it not be? I'd say it probably wouldn't be. And looking at these lows over here, which are convergent without that bullish divergence, we have gone above this area of the the bearish control zone as I have it drawn in here. Bearing in mind this is customized for how I look at things at 35, by the way, as opposed to 30 where other people have it. So we've just come to the edge of this now for the first time. I think it's quite clear looking at the charts why I have mine different. Looking at the bearish, look at this. This is why I do it like this. Can you see that? Can you see it? Can you see it? I'm sure you can. So now that we've gone above this zone here, are we going to do something, or are we going to fail at this swing point? I'm just going to double up on this one here and say that it's fairly easy to see where that line is, right? And this could obviously be quite good for us, but it's far too early to say. If the prices were to just diminish a little bit, then we'd fail here at this point. And if they were to exceed where they are now, then we could see some positivity. And if we see some negativity in the Ethereum markets versus the dollar prices, then maybe this is where we see this sort of thing come into play at. Bearing in mind that we've already spoken about this here, chat, over there on the Bitcoin pairing. But did we mention on the dollar pairing? Yeah, we did as well. So we've done all of that, and you can see then this is how this is lining up here as well for us. So obviously this is, got a lot of similarities to the other charts. The 144 going to be a good resistance zone for us. Looking down the way, then go down to the 4-hour time frame. What do you see here? And I think it's fairly clear at this target of the 50%, and why you could maybe become positive on this thing and be able to trade it from this zone, as we would have been able to do on these other ones over here, as well as we spoke about for various different reasons. Here against Ethereum, you actually have a really good deal of bullish divergence on all of these oscillators down below here. And bearing in mind the DMI works slightly differently in terms of divergence, but you've got this bullish divergence here, right, as we have this downward trend. And now we see that we've come up here and we're just trying to test at our previous high area. Taking that out would be significant. You're going past the 50 simple moving average on the 4-hour time frame. Let's see if the 21 can operate up as support, offer up itself up as support, or if we need to come in for another dose of this. And if we do, then the next target to look to on the downside has got to be 0.021. Of course, that's in terms of the movements, in terms of percentages. These are all shocking. Let me just get the measuring stick for you. So you can see from these lows to these highs, you've got 14% there. From those highs down to these next lows, you're talking about 20% movement towards the downside. So this is all very, 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 very good for trading for us. And you can see why precisely that is the case. And looking up towards topside targets, you're talking 29. Don't need to tell people that is yet another sort of 15 to 20% movement towards the top side. So yes, okay, that's going to do. I really want to underline the point that subscribing to this is probably the best financial decision that you'll make this year. Although I am not a financial advisor and I do not give out financial advice. What we do on the channel here is actually just called risk management. And when you do risk management correctly, it looks like you've got a crazy crystal ball on the go. But of course, it's just risk management, and that's what professional level technical analysis is all about. So that's what you're getting here, free of charge. I hope you like it, and I hope you share it with your friends. And if you want to take part in a Bitcoin giveaway, you just have to say, Rocky, you rock, in all of the episodes. Just do it in all of them. In the comments down below. You can do it as many times as you like across the board. Just enjoy yourself, go wild, and you might be taking part in that. You'd be taking part in that competition thing. Okay, dokie. Thanks so much for tuning in. Really do appreciate it. Let's see where the future takes us.